Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Tuesday, and we're sitting here at the 7th day, calendar day, of January 2025, 6:10 p.m. Central Time. You have pretty much a mixed bag tonight in the metals. They're sort of stable at this hour. You had a big run up off the lows in the dollar index come back, put some pressure on all those markets. Most of the foreign currencies are wobbling, but trying to come to the downside. And you're getting a bit of a, after the market, a good break today in the stock indices. When you go to my financial update tonight, we should talk about the 5-day rule in the stock market. Now, that's one of Yale Hirsch's rules. We'll get back to talking about it. But remember, these are just rules. The Santa Claus rally didn't work. Maybe this won't work. We'll have to find out just how things are going to play there. When you look at the energy markets, the API numbers did come out today. I'll cover those for you in a minute. Bonds and notes are stable after a good hard break today. When we take a look at the news for tomorrow, and we have a lot of it, let me get to it this way. The Mortgage Bankers Association numbers will come out at 6 a.m. The ADP U.S. private sector jobs, well, they're going to come out around 7:15. They're not looking for as big a number as they had the month before, but still gains. U.S. weekly jobless claims, they're due out at 7:30, so it's a jobs day, as you can see already. Wholesale inventories and sales data will be updated at 8. The EIA petroleum stock estimates, they'll come out at 9:30. We had the API already. And then we're going to get a day earlier. The energy analysts are looking for the EI natural gas storage. You're looking for a 53 billion cubic foot withdrawal in the latest report compared to the year ago week of 104. Now we're cold now, so you're just getting a little shift there. The API numbers that came out today, well, when you're looking at them, you lost 4 million barrels. That's why the crude is up, but you're adding into the distillates and into the gas stock. So putting back there, we'll see how the other numbers come out when we go to compare them to everything. All right, let's take a look as I move around here to gold. One of the things I've been telling you is I think gold is fighting a major battle right here at the 18-week moving average of closes. This is a close-only chart. You tell me what you see. I mean, it's right there. It's been there doing it all week long. The pattern is churning. You've heard me say that this is a difficult time frame. If you're trading right now, you're probably going, what do I have to do to get right these markets? And that's because you're spinning so much in them at this point. However, gold did pick up today and go to higher lows and a higher high. That part's bullish. The market's over the 18-day average of closes, so I would expect to see the pros try to get long 26.52 area. I don't think they want to see it get under the 26.24.50 area. That would be a problem for them. And if it picks up, I wouldn't look for an awful lot right here. I'd be looking for no more than maybe the 2700 zone, which is about where the Bollinger Band is tonight. Got it? So I think you're going to churn a bit. And overall, I think the Bollinger Bands are going to narrow in, and you're going to be fighting a battle right here against that 18-day moving average of closes. When we come over to slow stochastics, you're already overbought. So the market is saying that even on the pullback, while I think the pros will do some buying, it's not a clean trade because you're already into overbought territory. When I look at the gold-silver ratio, it's coming down here. I could actually change this whole bar now, this whole chart, to silver color. And the reason is now that you got 2 days at least under this 18-day average of closes, that means that silver is gaining in strength on gold. And I think you see that on the chart pretty clear. Higher lows, higher highs. Look for resistance to come in 31.58 to the 31.43 area, the 100-day average, and the market trying to figure out what to do as it's right now at the 200 and the 18-day average of closes. If you get back underneath right here, and we can come to that low so you can see it nice and easy, it was the outside day up. As long as you don't take out 29.87.5 anytime soon here, I think the market's in pretty good shape. Take that out, and I think you go wherever the Bollinger Band is if it happens tomorrow. After that, whole different game. If you take my outside day course, you learn that. When you look at the copper market, and by the way, just because I created a course doesn't mean it always happens, but these are higher probability events. Copper is very overbought. It's used a lot of power to come out of the uptrend. I don't think it has power to run right here. It would take some move out of China that comes out and surprises all of us with them doing something to, if you will, get this market going. I did see the government had come out over the weekend and they're going to defend the yuan. No, they're not. That's their method of countering the Trump tariffs. Defense means at first they were going to cap it at 7.2 to the dollar, then it's over 7.3 to the dollar. They can talk the talk, I doubt they'll walk the walk. What they have to do is if they're not going to get along, and I don't see them getting along with the U.S., they let the yuan fall a bit more to give them the advantage in the open markets where they are, their currency against the dollar, you can buy more. When we look at the platinum market, you've gone from the lower band back to the upper band. You've spent a lot of power, you're overbought. I'm not enamored with anything there. And in the dollar index, it's so desperate to make a hold here. Higher lows, higher highs. You cannot, in my opinion, afford to get through yesterday's low. If you get under that low, which is 107.57.5 and close under 107.70, you actually turn the trend back down. The unfortunate part is you lost the embedded readings. For all purposes, though, you've hit your target. Take a look at the low today. Take a look at the red line, the 18-day average. They're identical. So when you lose an embedded reading, you often make a run to the closest moving average. It's done it. It need not go back down. On the other hand, it's still overbought. This is a hard zone for this market. Remember, you're not going to be open on Thursday because of President Carter, the observance of him. Let's go over to where we're at right now. I wanted to show you this, if I could. All right, there, we're going to get to it right now. I don't know. I want to remind you about our free offers. And in the free offers, if you go to our website, iraepstein.com, free offers, these are all the different parts that we have with it. I don't know why this thing wasn't working right. You go into the page, it'll look like this, and when you get there, you're going to see a blue area that you click on. And it's a cart. So it puts all your free offers in a cart. At the bottom of the page, you get in there, you fill out your name, your email, get it to us, we send the information back to you, generally within a day or two, business day or two. So I think you'll find it interesting. There's just so many of the cool things that you want to get in there and learn from. So iraepstein.com, free offers, give it a click or move your cursor up here and it'll take you right to that page anyways. I'm Ira Epstein.